I have been following this for 7 years, and I've been correct. 7 years. This is a 96% R squared. This is better than your stock to flow mean. It has nothing to do with the Fed, Trump, the money supply. 95% of the price movement of Bitcoin is based on this unbelievable mathematical trend. And if Bitcoin is money, which it is, and it's a top 6 money, including gold.
They're going to turn the spending on turbo.
Trump is desperate for a new Fed chair. He's desperate for money printing. We probably are increasing the rate of exponential growth. You get that God candle. Everybody's waiting for it. Could be 50 years, could be 100 years, but it seems like those cycles are getting more compacted. 2 things could happen. It's either the TradFi system starts morphing. There's literally not enough sats to go around with exponential growth.
Mr. Mežinskis, are you ready to turn it on turbo?
I am, my friend. Let's go deep. Always happy to be here with you, chatting base money and other things.
Yeah, well, we're going to turn it on turbo during this conversation, but it seems like the U.S. government's going to turn it on turbo. We're going to outgrow the debt. It's happening.
Are you let down? Were you enticed? Were you enticed by the MAGA fever last fall, and now feel fully let down to a situation that was perfectly predictable to most of us?
Hand up. I did have some optimism. I mean, cautiously optimistic. I think I was, and I think publicly on the record, cautiously optimistic. It seemed, in retrospect, it seemed good to be cautious because didn't turn out too great and gave somewhat of an effort. I don't know if it was an earnest effort with Doge. And I think in the beginning, people were excited to see that a lot of the waste, fraud, and grift was being unearthed by the Department of Government Efficiency, but rather quickly it turned for the worse. And I think, as Lynn Alden's been saying for years, and as we've been discussing for years, there's no stopping this train.
Well, let me give you a little bit different perspective here from Eastern Europe, perhaps, as I do. We're not going to go too political. You know that war in Ukraine is always top of mind, but I'll start. As has been the case with my monetary base research, my power curve research for over 7 years. And I know people don't like a gloating sort of picture, but we've been promised hyper Bitcoinization. We've been promised super exponential growth. I've been trying to ground people in the realities of the research that I have done for about 7 years, 8 years. And then we have situations like what happened in Ukraine. Very much a free country has basically slaves trying to liberate it. You just look at a town in eastern Ukraine, which has been liberated by Russia and it's complete rubble. Right now, I'm on the border of the European Union, former Soviet Union, and it is super dicey still. Europe does have to step up. I will give Trump credit for lighting a fire under Europe's ass. But, everybody that's been supporting a strong, traditional, free world, i.e. with, national defense, both in the U.S.'s case or in Europe's case, or working together, I notice with not happy, I'm not happy to gloat about this, but if you look at the Trump rhetoric from the campaign trail about the Ukraine war, saying, I will end this war in 24 hours, said it multiple times. I will end this war in 24 hours. He said, in the early days, he said, I believe I have the power to end this war. He also said Zelensky, who everybody in the Bitcoin MAGA camp loves to hate, is a dictator, saying nothing about the 25-year dictator Vladimir Putin. He said Zelensky started the war in Ukraine. This is Trump trying to bend his ass over for Putin and create a great peaceful dialogue. Putin has done the exact same thing that all of us in Eastern Europe have been saying since the beginning for 3 years. And this is not just a Trump thing. This goes back to the Biden thing, too. You're happy. Traditional Republicans had the door wide open to go back to what they do best, which is national defense. And this is not invade Iraq situation. This is defending the free world. And let's not forget how Russia invaded Ukraine under the Obama administration, invaded Ukraine again under the Biden administration. This was teed up perfectly for a normal Republican administration. But instead, you goofy Americans, and I'm sorry to say this, I know that's not you directly, Marty, but a lot of people that are in the MAGA Bitcoin FU camp to every centrist. All you had to do was be strong. You didn't even have to send troops to Ukraine. All you had to do was be strong, send patriots, send missiles. In fact, if they had gotten max weapons 3 years ago, the war could have been over in 2 fucking weeks. I've said it from the beginning. I'll continue to say it. And where are we? After all this fucking bullshit, where are we right now? Trump sat there yesterday for the 3rd time reversing his moron defense secretary, Pete Hegseth, and this Eldridge Colby guy's decision. The 3rd time reversing their decisions about not defending Ukraine because Ukraine is getting pummeled now because they don't have the Patriots. Oh, it's tough to be right. It's tough to be right. I'm sorry to say this, but there's a proper way to deal with asshole bully dictators. It's not to call the good side a dictator corrupt. It's to deal with the 25-year dictator in the autocratic communist country. All right, that's my soapbox. I've talked about this many times on our quarterly updates. And here's my latest.
That seems like you are right. And it seems like Trump in the last week, I think I've seen the headlines. I will admit I have not had my finger on the pulse of social media and the geopolitical, macroeconomic, and the geopolitics. I've been following macro more.
Take Twitter off your phone. It's even better.
Yes.
Although I did put it on for Bitcoin BTC Prague. I put it back on and need to take it off again. It's like a drug.
Yeah. It seems like Trump is making an about face. Like I think it was yesterday or the day before he said he wants to send more missiles. But
what's the point? What's the point? We're wasting time. We wasted time. All I'm saying is, look, this is a centrist normal issue. It's way bigger. Like we're talking defense, the free world versus a dictatorship. We don't have to even go into it. I just wanted to say this piece, just like the power curve, which we're going to talk about, just like base money, which we're going to talk about, just like rational, data-driven, centrist. It can be free market theory, but let's not go into Looney Tunes theory of something that's like not grounded in any reality. It's like it's a lot of it is, you know, this sort of the hopium that's in the Bitcoin community is great at times, but you got to be grounded in reality, situationally ground the data. Bitcoin's not going to $1 million tomorrow. Enjoy it. It's a great asset to protect you from your wealth. And there is no salvation in a fucking 25-year former communist dictatorship, Vladimir Putin, fucking shithole country. There's a death cult. There's an absolute death cult. Listen to people in Eastern Europe. I'm on my soapbox, Marty. I love it. I'm sorry. It's a very angry gloating. I mean, I'm not happy about it. We're back to where we were. Republicans, I'm with everybody here. If you're a Tucker Carlson fan who's done his own about face, he was a big cheerleader of the Iraq War. I was never for the Iraq War. But if you're anti-Iraq war, I don't know how you can be pro-Putin war like Tucker Carlson is now. Just fucking moron. All right. That's it. That's it for me. Let's see how many hate mail comments you get.
Yeah, it'll be fine. Don't send the hate comments, freaks.
It's all right. I don't care. I don't care. You might care, actually, but.
I was telling you, I met Yael. What's his last name? Asaki?
Osowski.
Osowski.
Great dude. Great dude.
No, we had a conversation about this too. It is, and that's what I think my conversations with you over the last 3.5 years, which is crazy to think it's gone on this long. I told him, it's just like, yeah, like I'm not right there in Eastern Europe. So I do trust your perspective on this more than probably the mainstream media here in the US.
I'll buy a beer to any Bitcoiner that comes to Baltic Honey Badger, one of the best OG Bitcoin conferences in August. I'll be there, as I always am. I'll buy you a beer if you want to challenge our views. We are not going back under the fucking shitty Russian tyranny. Not going to happen, but it's going to be harder if the West, I'd say particularly America, Europe has to do more. 100% Europe has to do more. Western Europe needs to get their head out of their ass as far as the all the woke shit still. But I would say we need America. We need a strong America to not look only inward. I'm specifically talking about defense. I'm not talking about all the other stuff that Musk was working on with Doge. There's plenty of legitimate debate there. I'm just talking about the real world of autocrats versus democracies. And democracy is not that bad of a word. And yes, Yael is a great person as far as he's got a great historical knowledge on liberal democracy. I think he's the deputy chair of the Consumer Choice Center. If you're curious, people, they do great research. He lives in Europe. Consumer Choice Center is actually headquartered in DC, I believe. Think tank, but yeah, man, it's tough days. It's not going to get any easier. Bitcoin's a great hedge for all this stuff, but we're not going to be at $1 million Bitcoin tomorrow and all moving to the Caribbean.
That's what Samson Mal told me, though.
Well, he's got his agenda. We all got our agendas.
The Omega candle's coming.
And it might.
Let's jump into that. And for those curious about Yael, I'll actually be recording with him 2 days from now. That'll be out next week if you're listening to
it. Bring my fervor for defending the free world to that conversation. Bring it.
Yeah. Well, it is bringing this back to the monetary side of things. And one of the many other disappointments of this Trump administration, they take the good with the bad. I mean, I'm giving it's like
is the strategic reserve happening, my friend?
I don't know. I made some bets around that. I'm probably going to lose, but
really, what were the bets?
I mean, via executive order, it does technically exist right now, but is it enshrined into law? No. The priorities are all out of whack here. They wanted to focus on stablecoins market structure before a Bitcoin strategic reserve, which I would argue is probably more of a pressing need for the federal government that is $37 trillion in debt and is explicitly telling the American public and the global public that they are going to turn the spending on turbo in an attempt to outgrow the debt. And that's the other thing I wanted to bring up, from just a economic landscape here in the United States, now globally. I'd be interested to get your thoughts on the emergence and proliferation, acceleration of artificial intelligence and the effects that may or may not be having on the economy and the potential effects it could have in the future, where it seems like we have this, depending on who you ask, I'm pretty convinced it's happening. We have this emergence of this technology that will lead to economic productivity growth on the scale of the industrial and digital revolution, the internet revolution. And is that potential for increased productivity, abundance, and wealth enough to have people focus away from war and towards free trade and competition in markets? I don't know.
I have all the thoughts.
What are your thoughts there? Big meme right now. Big theme.
I think that we'll find the paradigm shift and we'll grow into the next spot. Not going to grow out of the debt, but that's actually not the main issue. We'll talk about it. But so I've been doing this power curve work, right? And we'll talk about it. But showing it. I think actually your show I showed it the first. Although I first tweeted about it in like 2018, and this Giovanni fellow who's kind of wraps his name around that on Twitter. People might have seen him. He's a bit cantankerous, but he quoted power. He observed that Bitcoin was following a power regression more than an exponential regression in September 2018. I did it in December 2018. He did it on Reddit. I did it on Twitter. I was following this. Trolololo is an old OG account on Bitcoin Talk. He was visualizing Bitcoin in a logarithmic regression, which is actually like very fast, super exponential growth at the beginning and then levels off. But there's a book by the guy's name is Jeffrey West. It's called Scale. Very good book. Statistician. Looked at a lot of data. Just talking about. He wrote it about 10 years ago, and you might remember, Marty, at the time, there was a lot of talk 10 years ago about the singularity. Ray Kurzweil was talking about this, right? There's a lot of definitions of what that kind of means, but Jeffrey West talked about the singularity, and he was looking at the growth, like long-term growth. We talk about growth trajectories. It's all that I do on my channel, actually. I make trends. I draw trend lines. I try to put things in perspective. I try to see where the growth is going, right? We can look at some charts, but the general idea is we probably are increasing the rate of exponential growth during certain key changes in our civilization, right? So before the industrial age, we were moving a bit slower. Before the printing press age, we were moving a bit slower than that. Before whatever it might have been, agriculture, we were moving a little bit slower than that, the farther back you go. And when we've added these new levels of innovation, we're still on exponential growth, right? Which is just constant growth. So you think about population growth, 2% a year. Well, that's slowing down actually a little bit. When you get richer, generally that slows down. But, economies grow 3 to 5% a year. Stock market grows 7 to 9% a year. If you invest your dividends, it might be a little bit more. Reinvest your dividends. Bonds can grow 5 to 10% a year. Just roughly. I'm just talking rough stuff, right? But the further back in time you go, those percentages were a little bit lower. So it's still constant for a time, but then we reach a new sort of epoch. We reach whatever it was, if it was the industrial revolution, if it was the digital revolution, and the fiat revolution is a part of it too, right? It confuses the picture, right? Because we went off gold 50 years ago, 55 years ago. So we force ourselves with this new growth. We have better stuff. Clearly, some people have better stuff. There's a lot of cross currents. We have, as you know, and your listeners know, we have a lot of money printing, a lot of distortion, a lot of central banking issues. But generally, we're moving from a situation where we have constant growth here. And then, 50 years ago, because of fiat, we might go here. And then digital revolution, we go a little bit here. And now we have AI, like you said, we have Bitcoin. So we're slowly sort of increasing that curve, right? Over a period of like an undefined period. It could be 20 years, could be 50 years, could be 100 years. It depends, right? But it seems like, if you look at the last couple hundred years from the Industrial Revolution, it seems like those cycles are getting more compacted, right? Like when you and I were kids, I'm a little bit older than you, but I remember my dad getting his first laptop in the 90s, big fat thing, slow, 500 and whatever, megabytes of memory, like just everybody knows the story. Now, here we are, 30 years later, and we have pretty amazing large language model tools and all the rest. So time is compressing and the growth is going faster. what Jeffrey West talks about in his book is that when you start layering these things on, if we would just do it mathematically, we have to keep going. He uses the analogy of a treadmill. Like, so 200 years ago, we're on this treadmill. But then as we improve, we move to another treadmill. It's a little bit faster, but we have to jump off that treadmill. And if people don't come with you, you're left behind. It's a good analogy, right? So you jump off, you go onto the other treadmill, older generations die, whatever it is. And you move and move and move. Theoretically, if we go on this super exponential growth, people jump onto a new treadmill every new generation, and that generation is getting more, that time dilation is getting smaller and smaller, but between the times we need to jump onto the new treadmill. At some point, we're going to get to a singularity. He calls it. It's not the Ray Kurzweil singularity. It's just a mathematical singularity where it's an impossibility to grow anymore. And from that point, it's a very interesting question. He kind of leaves it open in his book. He wrote this book 10 years ago. I don't know his latest, thoughts on how that all is sort of going to evolve. But the basic and Bitcoin was in its nascency 10 years ago, by the way. So I don't know if he has thoughts about how that goes. But my general thinking is we have a few more treadmills to jump to, but we're probably very close to jumping like to another treadmill, whether that is moving on to a Bitcoin standard, which again, as I just talked about at the top of the show, I don't think it happens all at once. I think it'll be something gradually, like either central banks or treasuries start reserving Bitcoin, certain economies start using Bitcoin. I think that gold will also play a part of it. Gold, don't forget, there's $4 trillion in central banks right now, today, because of the gold appreciation. There's only $50 billion worth of Bitcoin in governments. So 4 trillion versus 50 billion. We still have, we got some time. Everybody's excited, but we got some time for this stuff to play out. But I do think, just like we had a switch 50 years ago, going from gold to fiat, I think, and thankfully we have Bitcoin, I think everybody's seeing that that's just not going to last. So the next epoch probably will have some gold as a part of it, probably will have some Bitcoin as a part of it. But I think that still can continue for a while. How long? Again, I've said this on the first show that I talked to you about. If you were a gold bug in the 80s, you would have thought you had just won in the game of life when gold went from $35 an ounce to $850 an ounce for 2 seconds in 1980. And then obviously when there's a 20-year bear market. I'm not predicting that for Bitcoin. I don't think anybody is. And we have the power curve as well, which is showing that that's not happening. But basically, I'll stop talking here. But the point is, I do think this stuff can go on a lot longer than we think. But yes, I would agree with your general sentiment and with a lot of this sort of sentiment that's going around. And I would put it in, people should read Scale by Jeffrey West, because basically, I think we're going to jump to another treadmill. It's going to be faster, going to be more complicated. You got to take advantage of AI. Kids are growing up way different even than you and I grew up. ChatGPT is going to be part of their lives. It's just going to be very different. But I also think gold and Bitcoin will be a part of the monetary system, but I don't think it's going to be like some supernova change. I think it'll be an evolution, and Bitcoin will be a part of it. All right, so I'll stop talking.
No, I like that. I got to read Scale.
Yeah.
Get his mathematical singularity. Like on the other side of that, he leaves it open, but what is it? Are you left to assume, do we get abundance, or do we reach like Fermi's paradox, great filter, and fail to get through and something happens? Is that the juxtaposition he's sort of getting at?
Yeah, it's a paradigm shift. He definitely says it's going to be some paradigm shift. He doesn't go as far as Ray Kurzweil's, humans
become machines
into silicon sort of idea, but that's the idea. Yeah, I think, and you get these weird cross currents, right? Like Elon Musk was saying, we should have a pause on AI. It's so dangerous. And then 2 months later, he starts Grok. Like, what the fuck are these people talking about? They're just like, they're not even providing leadership. We know that Sam Altman wants the regulation. He wants his world coin. If you're a regulated AI company, you are just like SBF wanted the regulation for his shitty FTX company. He wanted to define how crypto was going to be regulated. And of course, he's a fraud as well. I'm not saying Altman is a fraud, but he looks like an evil supervillain. And he's got his world coin. So yeah, there's going to be pitfalls everywhere. Government is, as usual, as we know, is going to be part of the problem, not part of the solution. The thing is, they have the guns, though. They have the guns. It's difficult. I still think, back to my soapbox at the beginning of the show about Ukraine, that there's still value and salvation in the West than in a place like Russia. China's going to be scary, though. I mean, they're going to go for Taiwan. What are we going to do? I don't know. It's all this is coming.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
Sup, freaks? Guess what? We launched a browser extension. It's called Opportunity Cost, and it helps you see the true cost of everything in Bitcoin, convert prices to Bitcoin as you browse the web. Opportunity Cost automatically displays fiat prices in Bitcoin or sats, helping you think in a Bitcoin standard. It works on Amazon, Zillow, X, your bank account, QuickBooks. You can convert everything to Bitcoin. It's really cool. It's also 100% open source, MIT license. We don't collect any data. All of the conversions happen in your browser on your local device. It's a great way to recalibrate your life and begin thinking in sats. Go check it out at opportunitycost.app. That's opportunitycost.app.
Okay, I mean, to that point about there's still salvation in the West. I don't know about you. Obviously, you're not physically here in the United States, but there is this energy in the air, particularly driven by the emergence of AI, and I think more and more people beginning to grok Bitcoin, pun intended. I don't know, it feels like the American spirit is like the fire in the belly of the archetypal American is getting stronger. Like the idea that you can go out there and build something and just go do things.
Yeah. Don't need the government. You don't need...
Yeah.
What do you think about the American Party?
I think it's retarded. And what are you going to do? I mean, don't put on my geopolitical analyst or political American politics analyst hat too often, but I think if you're just looking out at the world in any other free democracy that has multiple, and it's weird because I've always said like we need to get rid of the sort of 2-party system here in the United States, but I think the way the American Party is coming to, you're just going to split the conservative side of the aisle and just hand everything to the socialist,
which would be a disaster.
Yeah. So I don't think the American Party is going to entice any of the Democratic Socialists come over and vote for them. So I think you're just handing everything to the Zoran Mamadanis of the world.
Yeah.
States' rights. Focus on states' rights.
I agree.
No, I think, and I tweeted this out. I read a newsletter about it 2 weeks ago too, where like Elon I understand. And who knows if it's like KFOB or whatever, just political theater, which I certainly would put a material probability on this being the case. That it's just some sort of distraction tactic, and there could just be some coordination behind the scenes. But if we're being generous and assuming earnest intention by Elon, it's like, come on, dude, how have you not recognized that you're not going to solve this problem by playing the political game? You have to work outside the system, embrace technologies like Bitcoin, open source software, and sort of build and route around the government that you have clearly identified as being extremely wasteful.
Yep. I just want to remind listeners that, you know, living in Europe with different priorities, right? I guess than certain Bitcoin MAGA types or whichever type you are, free thinker types. It's funny to look at the foreign policy of the United States from the lens of these guys, basically, because none of them have any idea what the fuck they're talking about. I don't know. I'm sorry to say it like this, but you know, there was a hilarious Grok question. It was like, show us the biggest Russian disinformation accounts on X, Twitter, as I like to call it. And number one was Elon. Number two was Tucker. And this is Grok. And then it's got like MTG. It's got Tim Pool. It's got Jackson Hinkle. Just these, you know, it's got Jordan Peterson even.
Jordan.
And a lot of characters all on the right, except for this Jackson Hinkle who morphs into whatever he wants to be, this wacko. But you know, there's I completely agree with you on everything like domestic and what you're talking about with working outside the system. There's still the question, and I've brought this up on your show before, right? Which I think is difficult, and like it definitely needs adults in the room. I would be fine if there was a change, but I don't know exactly how it's changed. But it's a lot of where my libertarian theory breaks down. It's basically handling the situation of, you know, the nukes better. And I've asked you as well, like if Texas succeeded, what would be their nuclear policy? You know, would they take the nukes from some of the silos in Wyoming, Idaho? Would they have the thought about that? You know, there are just some practical problems about defense and issues. And this is stuff that like nobody's going to get around. And yet all of these wackos have no fucking clue about the threat that exists from Russia. It's unbelievable to me. So anyway, it's the last time I'm going to bring up Russia. It's a lot of cognitive dissonance that I see there.
I mean, I said this a couple of weeks ago during an episode. With who? I think Tom Luongo. We need to adopt Elaine Howe's denuclearization protocol. Turn the kinetic nuke weapons into nuclear power. And prove that you're denuclearizing by plugging in miners, and we can look at the hash rate go up and have a certain degree of certainty that people are decommissioning their nuclear weapons.
And that would be amazing. If Bitcoin fixed that, then I think it would be absolutely be fantastic. One more reason to get on the Bitcoin train.
Yeah.
Serious about your Bitcoin? Start acting like it. Unchained just launched the Financial Freedom Bundle, a curated pack that includes a premium Bitcoin book, a new hardware wallet guide, and access to a private macro event with Tur de Meester, legend.
It's time to take control of your generational wealth. Go to unchained.com/TFTC to request yours. That's unchained.com/TFTC. Pretty hot package, freaks. Go pick it up. Speaking of the Bitcoin train, what the hell's been going on? Or before we get to the Bitcoin train, let's look at this chart you have up here. Basic money.
Basic money.
It's been hovering. It's been trending down.
It has. So I first published it 7 years ago. This was about this time in June, July, August 2018. $20 trillion. This is the core, for people that are new to this is the core central bank money of the world. This is the balance sheet of the central bank. It's the main liability item. It's called the monetary base. It includes notes and coins, all the physical cash in the world, also what they call bank reserves or bank cash, basically the bank's account with the central bank. That's called base money as well. That's everything is pyramided on top of that, essentially. And we can bracket the word pyramid because I know it triggers a lot of people, but again, you just gotta talk about reality here and assets and liabilities. But anyway, bumped up to 30 trillion to remind people, topped out at 30 trillion in December 2021, 30.5 trillion. Yes, as you said, this is like the graphical representation, the money supply representation of rising interest rates. So because of all the COVID madness and stimulus, they've had to raise interest rates, which they started in 2022, 2023. As well, currencies have lost value against the dollar. This is a Wittgenstein's ruler thing. It's hard to exactly graph all that precisely. You're looking at here with the lower amounts. You're looking at, yes, some less money supply or flat money supply, more like flat, actually, but a lot of dollar devaluation, which is interesting. So the dollar still remains the best looking horse in the glue factory. And yeah, so now it's at 26.2 trillion. But I very much believe, and I'll pull up another chart here in a second. Let me get it pulled up. I very much believe that this figure cannot stay this way for long. Trump is desperate for a new Fed chair. He's desperate for lower interest rates. He's desperate for money printing. The U.S. doesn't fully run the world. I take that point. But obviously, it's an important signal, whatever the Fed will do. And I'll show you this chart. So it's the same chart, but this is now just doing a trend line over the life of the modern central banking period since the end of the gold standard. The slope of this trend is about 10.5%. 10.5%. This is in dollar terms. You can make the case that it's actually higher because in native terms, I throw out this figure, it's closer to 13% or 1% a month. That's in native terms. But again, they lose value. If you look at it from the lens of the dollar, all the other currencies generally lose value. So you take it down about 10.5%. But if you look here, clearly, we're way under trend. This is a beautiful 99% R squared exponential trend. No one's going to tell me that fiat money doesn't grow exponentially. And if you put the 2.5 percentile, we're even under that. As of March 2025, which is my last update. This is actually our Q1 update, Marty. We haven't talked in a bit. I got to do Q2 already right now. But we'll get there after. Are you coming to Honey Badger, by the way?
Due to some family events, I will not be there.
You will not. Okay, no problem. Well, like I said, my invitation stands to anyone who wants to debate geopolitics with me and the shithole nation that is Russia. But anyway, we'll get back to something else.
I will say that there's very few activities that are more gratifying than drinking beers with Matty Mežinskis and Riga Latvia.
Thanks, buddy. We'll wait for you next year. So anyway, as you can see here, it can't go on forever. I don't know exactly. You don't even need to look at interest rates. You don't need to look at dot plots. But we are way under. All the central banks know how to do is print money. We're way under at 26.2 trillion. The 2.5 percentile is 27, close to 28 trillion. The trend itself is 35 trillion based on what they've been doing over 55 years. So it's coming. It's going to be gas on the fire. For
Go
Bitcoin
long money
development.
printing.
Yeah,
Essentially.
yeah. There's nothing really to worry about there. Let's talk about Bitcoin though. Price. So, one of the things I've shown you this curve, right? A lot, right? The power curve.
Yes.
Just for people that haven't heard of this before, heard of my work. If you look at the chart that we just looked at here, you see it's a trend line. This is 55-year growth of the money supply, the main money supply that's comparable to with Bitcoin. Okay, it's not M1, M2, M3. We could talk about that. I have that here, by the way. M3 money, which is what you should use if you want to go broad money, is about $114 trillion worldwide. And this is only the top 5 currencies. I don't actually have the rest, like I do for base money. So base money is 26 trillion. M3 money is 115 trillion. Anyway, that's deposit money. That's your exchange account. That's your Coinbase account, Kraken, different stuff. We can bracket that again. But it's important for people to understand exponential, in my opinion, primarily because of compound interest, just the way that compound interest is calculated in the banking system, is how everything grows. So back to our discussion about scale, everything grows exponentially. Whether we eventually increase the rate of growth, they get to that super exponential, is still kind of up for debate, but I think it's probably true. But nonetheless, everything grows exponential. It's a straight line on log scale. If you look at Bitcoin and a chart of Bitcoin and you run a trend line through it, far and away, I'll take all these bands off, just to make it easier. Far and away, the best fitting curve is what you call power curve. All right, so you can notice this is log scale as well. Doesn't matter the log, doesn't matter the orders of magnitude. It's not a straight line on log scale. So what's happening with Bitcoin, the phenomenon of Bitcoin, is something different. Like I said, I've been to the exponential, super exponential growth, hyper Bitcoinization, Bitcoin maxis chagrin. I have been following this for 7 years, and I've been correct for 7 years. It's not on an exponential curve. This is a 96% R squared. This is better than your stock to flow mean. I actually published the power curve before the stock to flow mean, but my budget remains $0 in marketing, which I'm proud of. But don't worry, if you haven't heard about the power curve, it's no problem. We'll get there.
And correct me if I'm wrong, but when you observe something that's following a power trend, it's typically networks, right? And it follows like network adoption.
Yeah, it is a feature. If you look at it in a distribution, a scaling distribution like Bitcoin, you have one feature of a network is you have many small nodes with few connections, and you have few small nodes with large connections. And that's a feature of whatever, even if it's a public company like Amazon or the internet itself, client server and stuff, that if you draw a line through that, that's a power curve. So that would be a straight line on log scale. Unfortunately, with my fancy charting analysis, I can't do a log, but if I would put the dates, and it's important to say here, the dates are not a function of this regression. The function is days. So there's actually a function here. It's a power function. We don't even have to get into the math. It's not a big deal. But there is days behind this. So right now the function is counting out. We're about 6,000 days from January 3rd, 6,000 days from the Genesis block. And just brass tacks, the what a power curve describes is proportional growth. So unlike with money or stocks or bonds, this is constant growth, right? Should be, everybody thinks this way, right? Like your stockbroker, talking heads on CNBC, they're all talking about, are you going to get 15% growth this year? What's your hurdle rate? 8% growth. They're talking about constant, continuous growth year upon year upon year. And the basic rule for that, rule of 72, if you take 72 divided by the return, remove the percent sign, you'll get the time to double. All right, so 72 divided by 10, it works best with 10%, in fact. So if it's a 10% growth rate, 72, remove the percent sign. 72 divided by 10 equals 7.2. That is your doubling time. So if you have 10% growth of an asset, doesn't matter the asset, you will double in 7.2 years. This is what compound growth is. This is what exponential growth is. For fiat money, as I just said, it's about 10% is the growth rate. So it's actually exactly what I just said. 7.2 every 7.2 years, this money supply doubles. All right, we could check that. We can go back here. It's 2025, 26 trillion. Or sorry, the trend. You got to go on the trend now. The trend is 35 trillion. We go back to 2018 or something, and 2017, 17.5 trillion. Right. So roughly every seven years is this. It's not exact on this curve. Like I said, it's like 10.2%. I think actually is the growth rate. Anyway, I keep getting on these side tangents. I'm sorry. This is exponential growth. Bitcoin does something different. What is it saying? Don't worry about the math. But what it's saying is, after observing this curve long enough, there's a percentage that you can get to, which is a constant percentage, but it's a proportional percentage. So the percentage is 12.7%. And what that means is, for every increase in time that the Bitcoin network exists, that is an additional 12.7%, the network doubles. That's what the power curve of Bitcoin is showing us. That's what has been observed.
So we're 6,000 days in, 12.5%.
760 days or whatever.
2 years from today should be double.
2 years. Yep.
Yeah.
760 days is roughly the doubling time of Bitcoin at the moment.
Mm-hmm. That
is the brass tacks number for Bitcoin. So that 12.7% will remain fixed, but the days won't remain fixed. So it's a different type of a growth than exponential growth. So having observed this, like I said, for 7 years now, playing around with the numbers a lot, thinking about it, gone through huge scams, 80% drawdowns, and then we've gone up with, ETF adoption and whatever, the Trump mania, that strategic Bitcoin reserve mania, even though that might not happen, regardless. My thesis, and I think I talked about this a little bit more with you, is I think that the growth of Bitcoin, and I'll show you this mathematically in a second. I think at the moment, we're still about 95% raw network adoption. Like, has nothing to do with the Fed, Trump, the money supply. 95% is based on this unbelievable mathematical trend. And 5% has to do with the rest of the money supply, the debt, the world. We're way early. We're way early. I think eventually that will flip and we'll get to where Bitcoin is. Obviously, we're on a SAT standard, Bitcoin standard. But I think right now, in the growth of the Bitcoin network, 95% of the price movement of Bitcoin is based on the fundamentals of the power law and the power Bitcoin growth, which is completely different than exponential growth.
This is the sober analysis that we bring you in here for. And in terms of where we are on this power trend line right now, it looks like we're right on trend.
Right on it. Yeah, we've been right on it really since the ETFs. ETFs bumped us up here to around 65K at the start of last year. We've gone back under, a year ago. Now we've been back up. We're literally right on trend. Right, so this is, I think I pulled in the model only at July 6th, 109,000. We're recording on the 9th for people that are curious, but it doesn't matter. I mean, a couple days here, a couple days there, it's not going to matter. But right on trend. And then if you're curious about where we can go, so I do this sort of multiple analysis. Other people do it different ways. I'll just explain to it to you how I do it. This would be the extremes. This would be the all-time extremes, and it's based on a multiple. I used to do it another way, but this is actually better and more intuitive in my opinion. So Bitcoin has never been outside of these bands, right? And you can see that here, right? It hit the top here in 2011 and here in 2013, hit the bottom here at the end of 2011. It will never be outside of this bands based on the math. And if you can visualize, so here's the all-time trend. The trend at the time was more inside that band. You know what I mean? Much sharper, faster. But the cool thing about this, again, I've studied this a long time, so I would encourage people to just take comfort in what I've studied here. Notice from about the end of 2016, you almost look like a beautiful mathematical curve that projects out. See that? See how it's like, even with the, really from about here, it's still adapting. I'm still taking the multiples, but it's damn near the same trend as when you would project out in the future. So it's pretty cool. It's pretty cool. That's the first thing. Okay, so this is the max. It's never going to get here to these numbers again, in my opinion. But let's take the 10th percentile and the 90th percentile, and I'll take off the extremes. All right, so I'm taking off the extremes and now just the 10th and the 90th. Here we also get some interesting stuff. This would catch what they termed the old crypto winter back in 2015. It would catch almost caught the puking here after at the end of the 2018 crash. And then the FTX puking here, it almost catches. But if you just look at this band now, we're a little bit high. All right, now I'll put the trend itself back in. All right, the all-time trend, the smooth trend. But basically, we're right on trend. Okay, so now let's put the upper percentiles. I don't want to bore people and go through every little thing. I stream about this like almost every day now, by the way. So if anybody wants to check it out, it's morning European time. It's 9 a.m. London time if people want to check it out. But I'm streaming about a lot of this most days. So the question, Americans like to get to one number usually. So I like to, people can't really think of percentiles or what it means. But if you can think about the trend, think about where we usually go every 4 years, and then think about a multiple over or under that trend, that might give you a target of where we could go. So theoretically, the end of the 4-year cycle is the end of this year. The trend line at the time is $125,000 Bitcoin. The 90th percentile is 2x the trend. Okay, so that's very simply 250K. All right. Let's look again now. I'm going to take off the 10th percentile. Let's look at when Bitcoin went over the 90th percentile. It was every single time, even if it was a little bit lower, as we can see in 2021. All right. Now let's zoom in on the 90th. Here's a different chart. Go log left. This is just the top 90, a rainbow of top 90 days. And actually, let's just review. So again, the very peak, which we had in the early days, is not going to happen again. Like a 7.8x move over the multiple. That's not going to happen. And I think you can take off the 99th, 98th. Let's even take off the 97th. What that leaves us with is a multiple of 2x trend, 2.8x trend. Let's just see how the rainbow looks. We hit it in 2011. We hit it in 2013 twice. We hit it in 2017 easily. And harder, but we did hit it completely, all these rainbows in 2021. Not saying that's going to happen again, but very simply, so if you take these rainbows out to the end of 2025, the trend's 125K, 2x that trend is 250K. Let's go up to the top end of that curve, which is nearly 3x the trend, 350K. So that would be my estimate for 2025. And probably because of a really large institutional entering of the market. Although, again, like I said, the real world, in my opinion, is very minimally correlated to this trend. I mean, the trend itself, the network adoption, is the bigger 95% of the price action. It's possible we go a little bit into 2026, I think, based on how we're just chilling on this trend line right now. But as you know, as I know, I mean, You get that God candle. Everybody's waiting for it. You get super bullish, fever, FOMO everywhere. It's totally possible by the fall we spike back up into this area. But yeah, this is generally my call. I would say by the end of the year, 125K should be the trend. I think we'll be 2 to 3x. The trend is a very safe, normal target. And, not financial advice, but people, do what you want to do. I don't think hyper Bitcoinization is coming at this point. I don't think the United States will collapse at this point. Russia is going to collapse before the United States. So keep focused. Take care of your family and make your own decision from that point.
Yeah. And I think I feel comfortable asking this. I believe you'd be able to speak to this too. I think what people really need to realize is that as the market cap of Bitcoin grows, it becomes even harder to push the price up.
Yeah, precisely. It becomes heavier, becomes a little bit heavier.
Yeah. And what are your thoughts on this broader Bitcoin treasury trend in public markets? Is it sustainable?
It's not sustainable, for sure. I think just buy Bitcoin, in my opinion. But totally logical and the right move for the early companies that are trying this. Obviously, we've seen what's happened with MicroStrategy. We've seen what's happened with MetaPlanet. That's not going to be the result for everybody. Early bird gets the worm, so to speak. But I don't think, as long as people aren't, taking excessive leverage with this paper that they're creating on top of Bitcoin at crazy prices to buy more Bitcoin, I don't think necessarily it's going to be a huge problem, specifically for the large holders like MicroStrategy. As far as I can tell, their liquidation level is very, very low still. But it's not a phenomenon that I think will matter over the long term. But I will say, in other words, I do think that Bitcoin yield eventually collapses to 1. But I do have some interesting thoughts on, at least I think they're very interesting, on how this could affect the growth of everything. Literally what we were just talking about. Because think about this, Marty. If everything grows exponentially, this is verifiable. This is due to the theory of interest and credit. I mean, an interest rate literally is a compound rate. It creates an exponential trend. Often, and this is what people in our space like to write about, this is an unsustainable trend, right? People take leverage, people make stupid decisions, things collapse, right? This happens in the old days, in medieval times, it happens across empires, it happens with currencies. I'm not saying it's going to collapse tomorrow, by the way. I'm just putting an observation out there, right? Exponential trends have a very difficult time. Actually, back to the top of the show, what we just said, unless you increase that treadmill, you jump on a new treadmill, you increase the growth, you have a paradigm shift in a new technology, and you can keep ahead of the trend, or eventually the curve, it becomes unsustainable. It collapses. Again, I'm not calling for, we can look at the US debt chart. I'm not calling for that tomorrow at all. And I'll show you exactly with numbers. But think about that idea. So we have the I'll just show you a chart here in a second. We have the TradFi world that is running exponentially. And then we have the Bitcoin world, which is running in power. And then we have some TradFi companies like MicroStrategy, like MetaPlanet, many others. What happens when the TradFi world starts to buy an asset that moves in power in the Bitcoin world? What will those stocks look like? So this Giovanni character from Italy, who's done a lot with the power curve, he's been talking the idea that it looks like the trend of MicroStrategy stock is starting to match that of Bitcoin, which makes sense, obviously. But that's a power curve. If everybody has Bitcoin, and that's a part of everybody's balance sheet, and Bitcoin against this numeraire of our world today, which is the dollar, moves in power against Bitcoin, that presumably the TradFi world as well will start to move in power. But this goes back to the old question about debt versus equity or interest rates or whatever. How do you price your cost of capital when you have this slowly asymptotically declining rate of growth every year with Bitcoin, which is very predictable? Money supply is very predictable. The power curve, as I've just shown you since 2016, is almost identical to the power curve if you add in 9 more years of data. Unbelievable. Unbelievable from like a statistical standpoint. What happens to contracts? Are you going to have a loan where you pay a certain amount of interest this year in sats, and then the next year you pay a little bit less in interest and a little bit less? Because once you have Bitcoin, generally everything looks cheaper from that lens, but it doesn't look exponentially cheaper all the time. The rate of growth does decline in Bitcoin. So it's starting to be a bit of a philosophical question, but let me put a chart here to show you this is one of my ultimate theories here now.
Yeah.
All right.
Yep.
Can you see this?
We had a conversation about this at the Philly John last month, and like thinking about this philosophically, like how do you reorient? And I think what one person says, like we have to reorient around like future value and like basing things off of future value of things versus present value, and sort of reorienting contracts, trying to value Bitcoin in the present and what it would be in the future, and base contracts off of that.
Yeah,
that makes sense. That's what I recall.
Yeah. It's the same vein. I'm on the same wavelength right now, so I'm going to try to show this graphically. All right. So this is kind of my ultimate theory at the moment. I've added in this chart. I started from 2008, which is when the December 31st, 2008 was when Bitcoin started. I'm taking all the base money in the world in fiat, which at the moment is 26 trillion. I'm adding, which I don't have a chart of, but you just take my word for it. I'm adding available gold and available silver. Basically what I'm doing. Okay, so you add those 3 things together. Technically, you got to subtract the gold reserves, which I said are 4 trillion, because that's on the asset side of central balance sheets, and there's now 50 billion of Bitcoin, dollars worth of Bitcoin. So subtract that out to not overlap. But you still count, that's still counted in available gold, so it's not overlapping. Bottom line, the value as of today is 43 trillion. All right, so that 26 trillion just grew to 43 because I included gold and silver. All right, so this is what I'm calling TradFi money, TradFi-based money. Old money, new money. It's the same exponential trend. It's always exponential in the TradFi world. This rate of growth is actually even slower, surprisingly, because the gold's growth has been slower in the last 10 years. So that's affected. So we just went down from about 10% or 10.2%, whatever it is, to about now it's 7.5%. This is a 7.5% trend line. So this now it's the opposite of what I just said. Rule of 72. This will double every 10 years. So I'll prove it to you just here. December 2025, 45 trillion. It's 46 trillion. December 2035, 92 trillion, roughly. Right? So it's roughly a 7% growth rate of this curve. All right. We got 100 years. We got 100 years on this chart, Marty. To not confuse the chart, I'm just taking actual values and moving right into the trend line. Now let's compare the TradFi base money growth with the Bitcoin growth, which, like I said, whether it's price, market cap, address growth, hash rate growth, it's all power. So here's how a power curve looks with Bitcoin. Much faster. Notice how that green line becomes nearly flat line because Bitcoin's growing so fast from 0. All right. And now from here, we can put a dominance, Bitcoin dominance index. And I've done variations of this before, but I think this is probably the cleanest way to do it. So here's a dominance curve. Zoom into here. This is graphically what I was just telling you before. Remember how I told you that I believe that 95% of Bitcoin's price action is due to the inherent nature of the growth itself, the adoption itself, people all around the world figuring out how amazing Bitcoin is itself. 5% is due to TradFi nonsense. this is literally the dominance that we see. So if you see Bitcoin is a $2 trillion market cap, that's roughly 5% of this TradFi fiat money market cap. And then there is this mythical 100 trillion number that gets thrown around by different people. Not going to name names. It happens to be that if we project out TradFi at 7% and Bitcoin at its growth rate, which is variable and it declines, we meet in the early 2040s. All right. And it's actually not 100 trillion, it's about 150 trillion, 155 trillion. It's just a trend. I'm not saying it's definitely going to happen, but bear in mind, dear listener, the Bitcoin trend has been pretty amazingly consistent for 10 years now, 9 years. So if these trends continue, and if TradFi continues to grow at whatever it needs to grow, whatever presidents and prime ministers want their central banks to print at, and whatever people value at gold at, and gold will be a part of this picture in my mind. Because again, central banks have $4 trillion worth of gold on the books. Then we get to about 100% in early 2043. So let me know if you have any questions just at this point.
So is that the target date for a Bitcoin standard?
I think it'll happen before. Before. Bear in mind, 100% actually is 50-50. So in TradFi based money, there is no Bitcoin there. It's literally just gold, silver, and fiat money. And then I have layered next to it Bitcoin growth. If central banks and treasuries, in particular, would be better if it was treasuries, it would be better for the world if it was treasuries, not central banks. But if treasuries started to hold Bitcoin, this green line would come down faster because again, I remove the asset-backed portion of the money. I remove any gold or silver in the central bank. There's no silver, but I remove the gold and I remove the Bitcoin. So this green line would come down faster. Bitcoin would cross it faster. The more treasuries reserve Bitcoin. That's an unknown variable. I'm only just taking current levels, which are very low right now. As well, I think 2 more halvings is where anybody around the world is going to need to see to understand how like amazing this thing just keeps churning along. You know, you can have that issuance, the price continues to rise. Whatever, it's just a feeling. It's not really much more to say about that. But 2 more halvings from now, right? You know, you're roughly around the 2032 area. And that would leave 10 more years to get there. And I think it probably would start to happen at that point. I think somewhere in the early 2030s, this is where you're at, already $20 trillion Bitcoin. Many more contracts are going to be done in sats. And we just start to get there.
Yeah, my mind immediately goes to, obviously we were just talking about like the MicroStrategy and copycat sort of attack public capital markets to accumulate Bitcoin. But looking at this power trend and the fact that it's been so clean for almost a decade now, putting on like my venture hat and my business owner hat, if somebody owns a business here at TFTC, like being able to internalize this trend, block out the noise. Like once you've internalized it, it enables you to block out the day-to-day noise of this, that, and the other headline and intraday price movement affecting your perception on Bitcoin. If you can internalize this power trend and basically stick to like, this is happening, here's how Bitcoin adoption is happening and what that does to price over the long term. Like if you're just building a business that can provide a good or service that produces revenue and you produce that revenue, the cost to produce that revenue is cheaper than the revenue we're bringing in. So you're bringing in a profit and you're funneling that into Bitcoin and you're thinking like Warren Buffett, long-term cash flowing business, value accretion, like internalize this power trend and then go build a business that provides goods and services at a profit, funnel it into Bitcoin, and you'll wake up 2 decades from now with a very valuable business.
Yep. 100% agree. And that's what I'm seeing. But there is a wrench here. This is back
there's
to
always a wrench.
yes. This is the thought experiment. It's philosophical at this point. I fully admit it. Again, I'm not saying that Bitcoin is like. Remember, our numeraire is still the dollar. You know, I know a lot of people think the United States is going to collapse. Whatever. Like you said, it's better just build around it, embrace the free world. You got a lot of shithole countries like Russia that you need to understand are completely illiberal, no property rights. Sorry, just got to go back to that. The world is a big place still, and there are a lot of issues here. So again, hyper Bitcoinization. I'm sorry, I've been right about this now for 7 years. I see this continuing. But here's the interesting thing. Back to our discussion about exponential growth versus power, right? So power is a very sustainable growth, as you can see, just here, right? I mean, this is just a beautifully sustainable curve, right? It's as the thing gets heavier, gets bigger, it grows a little bit slower. I'll graphically show this now in a trailing 12-month on the right-hand axis. Okay, so it's here. Obviously, it's super fast growth here. I'm going to zoom in. Thousands of percent the network was growing here when we was literally rounding to $0 trillion. By 2012, we were about 1,000%, under 1,000% into the year 2013. Okay, that's the trend, growth of the trend. Look at this curve now. All right, where are we today? 45%. It's exactly what I just said before. We're doubling every 2 years, or we're doubling at a 2-year rate right now, which is 760 days. But the growth rate will decline. The doubling time will increase. So I need doubling time here as well, just to make it even clearer. But we're falling as we increase, and we increase still very rapidly in the dollar market cap of Bitcoin. All right, by 2030, we're looking at $10 trillion market cap. That's only a 31% growth rate. Still an enormous growth rate for Wall Street. And I predict it still will be an enormous growth rate for Wall Street. But I will show you a TradFi stock in a second, which makes this a little bit interesting. Anyway, 2040, when I think we'll be at about a 20% rate, still huge, trailing 12-month. But here's where it's a little bit weird, is what happens when we get to the rate of TradFi. And in my chart, remember, I'm representing TradFi as about a 7% growth rate a year, okay? As we're talking about money, just think basically this is saying you better at least get 7% because the money supply is growing that much, okay? That's just a basic way to understand understand this TradFi chart. Like, if this green line grows to 7% a year, you better at least get that. And obviously people want more with various small businesses or whatever, you hope to get a higher rate of return. So it looks like there's no problem here, but obviously you need just a basic understanding of geometry to understand that one of these lines is straight, one is not straight. So this will actually cross back down again in the future. So what does that mean? How do we play that into our model? Especially when, and I'm going to take off, I'm just going to leave the growth rates, and I got to zoom in. What happens when we get to here? Right. So now Bitcoin is coming down by this is the year 2086. You got to love my projections here. I'm not saying I know exactly what's going to happen in the year 2086, but we get to the year 2091 and we hit 7.3%, which matches that old TradFi constant growth, exponential growth. How does our dominance curve look like? This is actually where it crests. All right. I'm going to blow the chart out. Actually, I need to hold on. This is the dominance curve now. Okay. So we get to 100%, early 2040s. We get to 543% or something in 2090. But as that curve crosses, mathematically, obviously, it's going to crest. It's going to go back down. So look, this is philosophical. I understand that. Don't at me saying I'm saying this is, 50 years from now that I was wrong, obviously. But one of two things could happen when we talk about these growth rates. All right. In my opinion, it's either the TradFi system, which is exponential, as more people take on Bitcoin, like these Bitcoin treasury companies, starts morphing to a power-based growth system, which is Bitcoin, or Bitcoin, which is a power-based growth network model, starts getting subsumed, taken over, starts morphing to a TradFi exponential growth system. Systems can morph like this. I'm not an expert. I'm not a statistician, but they can morph. One of those two things would have to happen. That, to me, is the philosophical question. And I think if we imagine a system where Bitcoin is a little bit more captured by the state is still around, people, it's a less optimistic scenario, in my opinion. I'm not saying it's a dead scenario. Neither scenario Bitcoin is bad. I want to be clear right here. Both Bitcoin is good in both scenarios. But if Bitcoin moves into an exponential mode where you kind of just compare it with the stock market growth or, whatever, the deposit rate of growth or whatever, then that probably means Bitcoin's pretty integrated into a controlled TradFi system. On the contrary, if the world is more free and people are using Bitcoin and there's a lot of control, and Bitcoin still continues to have this natural, interesting, sustainable power growth that kind of levels off with a slower rate of growth, and everybody understands sats. Everything else is getting cheaper in terms of sats, but interest rates won't exactly make sense in this system because interest rates are constant. You have to understand that point. If all of those things are true, then I think this is actually a graphical representation of the TradFi system will go power. And this is my next step of my research that I want to look at is, and I don't have an answer to you yet about this, but I'm just thinking about this, is I think if you start to get a bunch of companies on balance sheet holding Bitcoin, and Bitcoin becomes a huge part of their cash reserves, then you might see their stock prices have this gentle bend. It's still way faster than TradFi, but it is going to be a more gentle bend in the power direction. And that's going to have like vast implications. Like I can't even explain, again, how that's going to work. But anyway, that's my thought. It's to me, it's kind of interesting. I'm just I'm still playing around with it. But I think what we're going to see is two worlds colliding. And mathematically, one is exponential. The other one is power. And we're going to actually see which one wins. And I'm not exactly sure which one will win. But those are my thoughts.
Oh, the caveman brain in me, just looking at the power versus the exponential growth rates and many of the charts that you've shown today, and intuiting that humans, our brains really cannot fathom exponential growth. We can fathom it, but like you can't recognize it's happening to you while it's happening in the moment. A lot of times, it seemed like an economy based off of systems that are growing in a power trend is much more predictable and much easier to plan within compared to exponential.
Correct. But the rub there, the one hiccup is, and let me put this in this way, and I got to do here, but annoying software, but go. This is the growth rate of each. Okay. Here we are. Roughly right now, Bitcoin's at 45%. Let's just assume, I know TradFi has all different hurdle rates, people have their own, but the growth of base money plus gold, silver on a market cap basis, 7.3% per year. I would actually contend to you that our primitive monkey brains say the opposite. It's easier to predict something like this. And this is indeed what the talking heads on CNBC say every day.
Yes.
Can you get me a 7% return? Can you give me an 8% return? We all have different returns, and returns do change a little bit, but generally, if you graph this out, the interest rate is a straight line, and also the growth rate is a straight line. Right? One goes up to the right. That is the actual in dollar terms or the stock. But the rate of growth is a predictable 7% per year. That's a powerful force. It doesn't always work, like I said, and we talked about it. It can explode. It can be unsustainable. We can talk about debt. We haven't even talked about that. I don't know if we'll have time on the show, but I got charged for that. We can go a while longer on the debt, in my opinion. But this is TradFi. What happens when you get a network that starts growing? Sorry, this is TradFi. in a rate of growth. What happens when you get a network that's so amazing and so strong and everything gets cheaper in terms of it, but the nature of it is actually that the rate of growth declines every year in a more sustainable way. And then what's the weird thing? Do we go back to TradFi in 70 years or 60 years, whatever it is? 80 years when we get to here? This is all very interesting questions, in my opinion. And I don't have an answer. But this is this black line, which is the growth rate of Bitcoin as a network, is only seen in sort of like nodes and I don't know. It's sort of weird networking things. It's not really seen in assets. In assets,
it's kind of like things, natural emergent systems, right?
Things grow this way. Yeah, it's more exactly. It's more of a natural emergent phenomenon, is what this is. It's a sustainable phenomenon. But this is more financial phenomenon. And so these worlds are going to collide somewhere here, probably. Like really, obviously, as we said, Bitcoin's going to overtake the value of that world. But that's not the end of that other world. So I'm trying to figure out this stuff. Let me show you one more thing here while we're on this train of thought. How much more time you got?
We got like half an hour. We got plenty of time.
So here's Procter & Gamble. This is good old Cincinnati company. My Porkopolis brand is actually based in this because it's a over 100-year S&P 500 company. Started as a soap maker. Soap was a byproduct of the hogs in Cincinnati during the Industrial Revolution. Then it turned into a consumer product powerhouse. Then it turned into a marketing powerhouse. Sort of, you never know where an economy will go, basically. That was Procter & Gamble, Fortune 500 company. And here's how it grows. All right, this is market cap of P&G. It's about 400 and, under trend, but at the moment it's $400 billion market cap. Procter & Gamble. All right. Trend is higher. You can see it just pops up to the trend line here. It's 425 billion, but there it is. Not as fast as the growth rate as actually I think it's about 9% growth rate is this trend. And I'm only measuring this again from 2009. So it's actually had slower growth certainly in the 1800s and slower growth in the 1900s. But as we've moved up those treadmills, it's faster. So here's P&G and here's Bitcoin. Bitcoin obviously has no problem beating it. Bitcoin, as we know, is one of the top. If you valued it against stocks, it's one of the top 6 stocks in the world right now. Bitcoin's not a stock, but it is top 6 stocks in the world. So it has no problem beating this. And even with that power curve, which is not a straight line, it's well above it, and we don't have to think about the future, right? That Bitcoin dominance curve it does crest, but it's way out in the future. We don't have to really think about it, right? But what happens if we look at a company like Apple? And I will. All right, it's always ready. If we look at a company like Apple. Apple's grown extremely fast in the last 15 years in the life of Bitcoin, right? Started out when Bitcoin was born, Apple was a $70 billion company. And this is why people that don't actually look at the numbers, you'd be amazed at how fast things grow. Apple was a $70 billion company on January 3rd, 2009. Now, $3.2 trillion. A $3.2 trillion company. What's the rate of growth of that over the last 15 years? 22% per year. It's massive. Not as big as Bitcoin's, 45% at the moment even, but it's still massive, and it's still a straight line. Unquestionably, exponential growth, 95% R-square straight line on log scale. Now, let's put Bitcoin. I'm not saying Bitcoin has to be bigger than Apple, but let's just put a TradFi system, which is also a network, by the way, Apple. Don't get confused with that, with the power versus it. But obviously, there's a network of Apple users, but it's still a company. It's still TradFi. What happens when we put this exponential growth against that same Bitcoin power growth? We cross it, but very briefly, and then we're actually back under it already by 2046. About the time we're going to pass fiat-based money, we're back under it, and we do the dominance curve, we crest way earlier at only about 120% the value of Apple, and then we go down. So again, I'm putting this out here live for viewer content, so to speak, and feedback if people have thoughts about this. I don't think anybody's explored this as far as what is actually this means, but there are few stocks that can compete with Bitcoin this way. Apple's a huge company, it grows fast. If we assume that it will continue to grow at a 22% growth rate per year, which is massive, then Apple's going to be a 200, by 2040, Apple's going to be about a $90 trillion company. Bitcoin will be a $105 trillion asset, bigger. But that power growth of Bitcoin will be slower, and Apple will still be on the exponential growth. There goes back to my question. Does Bitcoin move to exponential, or does TradFi move to power? Because maybe Apple shareholders are demanding that we hold Bitcoin, in their treasury as a cash asset. This is what I'm trying to play around with at the moment.
Well, I think if we assume that at some point in the next few decades we hit a Bitcoin standard, right? Like, would it even matter? I mean, you would imagine that a lot of these companies would be forced to hold Bitcoin on the balance sheet, and then like their stock would be priced in sats, and the treasuries of the governments would have a lot of Bitcoin reserves, and people would be pricing stuff. So I think at some point along this journey, there'll just be like a disconnection from the fiat system. I don't know. I'm just spitballing here, but
no, I that's what I'm saying. I don't think compound interest works in that system. I think you can have interest in debt instruments and all the rest, but you'd have to literally pay, as you talked about with your friend who you're talking about this, like you'd have to think in terms of the future value of the money. Bitcoin is going to be on such a strong trend. Like you and I see this trend now. We see that it's 96% R squared. It's amazing. We're on the trend. But it's on such a strong trend that holds your purchasing power. With this limited supply, everybody's using sats. So there literally won't be enough sats to go around with exponential growth, right? So if there's literally not enough sats to go around with exponential growth, a compounding loan contract, what do debt contracts look like at that point? What do factoring or the word like working capital type contracts look like? What do line of credits look like?
Yeah,
this is I think a very interesting question.
I mean, I think SAFE has been a big advocate of this, but you just transition to an equity-based funding mechanism where you're putting up capital, you're just buying a percentage of the revenue, the profits moving forward, right? Dividend payouts. Do we move all of financing to that model? I don't know.
I don't either, because remember, the TradFi system's still around. Mm-hmm. We may not like it. We might not get to this point where everybody is taking nukes and denuclearizing and selling into the Bitcoin network their nuclear power, which I hope they do. Totally agree with that point, by the way. It's a question mark to me. It's a question mark to me. But what I think I'm onto here is a graphical representation of sort of this this connection. It will be faster and almost a non-issue for some companies. For example, here with Procter, like, if it was just like, say the biggest stock in the world was Procter & Gamble. Not, but let's just say it was. And Bitcoin was the value that it was. It has this value. We wouldn't even need to think about this question. Maybe the TradFi world would still move on some continuous compounding, exponential growth, standard compounding loan type situation. And then if you wanted to get out and take profits and get into sound money, then you get into sound money. because Bitcoin would be bigger than Procter, and it just, the stock market would be a separate player, separate game. But this happens with Apple. It also happens with Microsoft. And a few, there's only 5 stocks in the world that are bigger than Bitcoin at the moment. Google is another one, Amazon and Nvidia. Those companies, which are all obviously network sort of based companies, they have network effects. They have a lot of power. They have a lot of power in government. And this sort of I don't want to use the word singularity, but this crossover, this convergence happens a lot sooner than it was, even with the fiat money. Remember, this is the fiat money chart. Bitcoin has no problem passing and staying above it for a long time, right? And for a few months, I was running this, and I was like, oh, maybe it just doesn't matter. We'll be on a SAT standard, whatever. But it's very interesting. There's a few companies that are still bigger than Bitcoin, and they grow exponentially. So I want to believe. All right, I'll put my Bitcoin utopian hat on. I want to believe that Bitcoin's going to change the whole world and move it to a system that is more sustainable. Other people might have other ideas.
Yeah, what's the argument against that? Somebody like Apple would be like, shareholders will not be happy with power trend growth. They prefer the exponential growth that we've exhibited for the better part of half a century. Would there be like some internal pushback on that because they're essentially at some point accepting lower growth rate and they're not happy with that, so they would lobby the government and try to perturb the adoption of Bitcoin as a standard.
Yeah. You see what I mean? Like if Bitcoin was just dwarfed the size of Apple in the projection, and I'm not saying the projection is gospel, but it's pretty good, and I so far I believe in it. But if Bitcoin was like dwarfed it was like the safe place, like it's like you take your risk in the stock market and then you go back to the castle for safety, then I wouldn't even ask this question. But Bitcoin does not dwarf Apple. It does not dwarf Microsoft. Also, keep in mind, gold grows exponentially, and Apple, Microsoft, Nvidia, they're all smaller than gold. Gold is a $20 trillion asset at the moment. Gold has not gone away. Gold has had a great year, right? In the last couple of years, it's gone up 3x. It had a terrible 2010s. Much to Peter Schiff's dismay, much to his chagrin, it's gone completely sideways until a couple years ago. But there's a lot of moving parts here. My point, again, hopefully the listeners can catch the thread of my cut of my jib here. I'm not trying to be utopian. I'm trying to show you some warnings. I'm trying to show you the data. There's a lot of numbers here where I've put this together. Yes, we're in a dollar numeraire situation. But looking at these large cap stock market caps against Bitcoin is kind of interesting, the growth rate. So.
Yeah, it's funny, like we're focusing on Apple too. So I'm not sure if you've been paying attention to the conversation around Apple and the TradFi world, which is they're falling behind. We've got a ton of cash they've reached, and a lot of equities analysts talk about this point. Like you get so big that your incentive really isn't to innovate, bring new products to market and grow. It's just like to protect the cash flow cows that you've already produced, which introduces like the innovator's dilemma. And it's something like, is there like natural entropy to companies that reach this scale from a productivity and growth perspective?
Yeah. And actually, that's a good coda. I should say that because, again, this is more analysis I need to do myself. But remember, this trend line for Apple that I drew here, this is only based on basically the best years of the company, right? Like iPod was in full swing here when Bitcoin was launched. They were just moving into the iPhone, which was a mega cash driver. So this was the best years of the company. If you put a trend on this market cap growth, 22% per year, mega, fucking mega. But if you stretch this out, and I went back to the 80s for Apple, I don't know what it is, but their growth would be much slower, like call it 10%. I don't know. And it's totally if you want to sort of, it might be hard when I talk about constant growth, but it all depends on where your starting point is when you do this. Okay. So I'm picking the life of Bitcoin to measure this, but it's totally possible, like you said, that Apple becomes like an IBM or something, like it's a bad analogy, but like it's a more legacy tech company, whatever. And because of, like you said, the innovator's dilemma, they just need to help their shareholders. It could be that if you back this out and you looked at the lifetime trend of the Apple stock, let's say it's 10% per year from the 80s, not 22% from 2008. It could be that Apple reverts to that lifetime trend, and then you would still be on a lower trend, and a trend that would be passed by Bitcoin in a sooner fashion than, or in a more sustainable fashion, let's say, than what this looks like. So that's also a little coda. I know we're talking a lot of numbers when I come on, and I just want people to understand, like,
no, I love these thought experiments.
Yeah, your compound growth can change. It's just pick a lifetime number and see what it is, and then you'll kind of get the broad framework of how things grow. It's like the stock of gold grows 1.8% per year. The actual units of gold. That's been a constant number for over 200 years.
Yeah. Yeah, because it's hard to see people disrupting Apple materially in the next decade on the phone and the laptops. I think that's probably like the biggest driver of innovation within Apple is actually the chips, the M1, M2 chips. They're pretty incredible. Phone, they're not innovating too much there and actually messing up the UI and the software. That's a big question now with like Meta, OpenAI, Tesla, Microsoft really leaning into AI, and Apple falling behind. That's like a lot of the analysts are like they've turned into this massive, bloated, sort of fat and happy corporation that's just protecting its existing cash flows and just trying to sustain. And is there some point in the future where that entropy sort of hits a critical threshold where upstarts or competitors are able to take market share from them?
All reasonable thoughts. Here, I have it on my website as well if people want to check it out. This is the ranking at the moment. So NVIDIA is a nearly $4 trillion company. Microsoft 3.7. Apple, here you see it 3.2. Amazon 2.37. Then Bitcoin at 2.16 trillion, just ahead of Alphabet. Passed Meta pretty handily this year at 1.87. And then the old Saudi Aramco, 1.61 trillion. Interesting outlier there. The only non-tech type company.
Well, it is. I love these charts because it really cements Bitcoin as a brand name. Because when you think of NVIDIA is like a relatively new brand name, but brand name nonetheless. But then you get Microsoft, Apple, Amazon, Google, Meta, formerly
and
Facebook.
NVIDIA's been around. NVIDIA's been around for decades.
Yeah, it's just way more popular these days.
Yeah. No, it's Bitcoin is actually I said 6 before. It's ahead of Google just now. So if Bitcoin were a stock, it'd be a top 5 stock globally. It's unbelievable. And if Bitcoin is money, which it is, then you go back to this chart, and it's a top 6 money, including gold. So we got gold, 20 trillion, as I said. The dollar, 5.8 trillion. The euro, 5.4. China. This is from actually. I need to update this, but this is I think Q4. The euro 5.4 and the Chinese yuan 5.25 trillion. Oh no, I did up this. I think I did update it.
Yeah, we're at 2.16 right now. I'm looking at the chart.
2.16. This live updates, but sometimes the last quarter in native fiat is updated every quarter. But anyway, the exchange rates update every day. So yeah, that's my stuff, man. I know I'm pumping a lot of my own stuff these days, but if anyone would like to donate,
your stuff's good. Pump your stuff.
You got my BTC Pay server. I'm the anti-newsletter guy. I'm trying to give all this stuff away free. But if you like it, I stream daily and And I'd love to hear people's thoughts about the way things grow.
I feel like you should be selling this data to hedge funds.
I've been told that a lot.
Because you're the only one who aggregates all of it, right?
I know. It's true. It's honestly true. There's no APIs. You got to go through and do it. Brass tacks. A lot of it is kind of like, look, I mean, I'm putting the Peruvian, central bank data in my exhibit. Does anybody really care about it or think about that? No, they think about the price of Apple. So a lot of people have data to the real liquid markets that already, that exist. But it is an interesting, more economic thought experiment to put all the central bank money together. I've been doing it for a long time.
There has to be some esoteric quant firm out there that would love this data. I'm playing with it again, not to toot my own horn or whatever, but it's been a total closed loop. Like I don't share it. So, I mean, if people like it, I show it. You have my reports, quarterly reports. We do the YouTube videos. The moment that I put it out there, even if you put it out there behind a paywall, obviously people can steal it, right? Because it's in whatever, like JSON form. And even if it's behind a paywall, people can get to it and scrape things and whatever. Everybody's got to make a buck. I'm trying, no doubt, to continue. I enjoy this. I just accept it's value for me. So it's like donations. If you like it, please throw some sats my way. But if you don't have to follow. And that's. Will you go down to your BTC Pay server, please? We're going to show the power of Bitcoin right now.
Yes, we will.
Do it live on air.
You're the man, dude. Lightning?
Yeah, let's do Lightning. Let me see.
Love you, dude. This is power of Bitcoin.
Watch. This is the beauty of Bitcoin. You're completely on the other side of the world. Bam.
And there it is. Dude. That's a good one. Thank you so much, my man. Thank you.
Well, thank you. I don't pay for guests, okay? This is not what just happened here.
I have never requested payment, just to be clear. I have never. Only donations, value for value.
Yeah, it is a ton of value. No, and again, whether it's what's going on in Eastern Europe or how to think of, because we've been doing the show for 6 or 7 years now. It's hard to believe. Yeah. Quarterly, and then I think you're definitely the most tenured guest on the show now at this point. We've probably done 20 to 24 of these.
Yeah.
Which is insane.
We'll continue to do them, won't we?
Yeah, we will. And because it is again, going back to I have to remind myself even when I was going back to looking at the power trend and internalizing that and just using that internalization as a filter for all the noise that is rampant on an intraday basis and only going to increase from here. I have to remind myself, this is why these quarterly updates are somewhat of a Bitcoin therapy session for me to ground me back in reality and just understand that we have this network growth rate that's happening. It's observable. It is repeatable with other networks outside of Bitcoin. And I think just looking at this observable data is very valuable. And thank you for putting it together.
Well, you're welcome. And I also want to say I appreciate you listening to my soapbox rants about Ukraine now for 3 years, because I am well aware there are plenty of Bitcoiners, MAGA types, or even if you're not a MAGA type and consider yourself a purist, libertarian, you probably don't know a lot about that situation. But again, I'm trying to, I'm pretty grounded over here. I feel like that we're literally under threat from a dictatorial regime. And it's just, you might. Yeah, go ahead.
I was going to say, going back to what I was saying earlier, I'm a big believer in information systems, and those closer to the information or the data probably have a better sense of what's going on. And physically, you are there.
Yeah. It's not easy. It's going to continue.
That's my problem with the federal government too. It's you have all these people in DC making decisions from the East Coast, and they're making decisions for people in Idaho, and nobody making those decisions is close to the information that should be guiding those decisions.
Yeah, precisely. That's the problem with the Federal Reserve. Problem with even decentralized network of 12 Federal Reserve branches, which, you got like a Richmond Fed, kind of weird now. Anyway, they don't know, like you said, what the real reserve ratio should be for banks in Wyoming or something. So, or wherever. So, I know Richmond's not in Wyoming. I was just making an example of many different places where people can be, and your planning board, as Friedrich Hayek says, is never going to work like the market. So. But we do have the nuclear issue. We have the nuclear umbrella issue, and it's tense right now. I'm not going to lie, it's tense for us. The Ukrainians are suffering, and I appreciate you guys listening, and I say that to all the listeners as well, because I know I can be strident about it, but I also feel that I'm right, and I feel that if you're a Republican, traditional centrist, call yourself libertarian, whatever, you have a lot of ground to stand on as far as being prepared to stand up against a threat. I'm not talking about wokeism or all the other rest of them. I'm just talking about a real normal threat. And it was 2 Democratic administrations where Ukraine fell way behind in the free world. So anyway, I appreciate you guys letting me blend topics when I come on the show and talk about long-term trends of Bitcoin and then other geopolitical stuff.
Well, we appreciate you coming to do it. And I think if we're living true to the name of this company, TFTC, Truth for the Commoner, I think the way you find truth is getting different perspectives on the same topic. So I love our quarterly updates, even the parts that a lot of the listeners don't like. So,
well, we're gonna see. We're going to see. All I can say is the direction that the administration is currently moving in is the direction that I was screaming for 3.5 years. You tried appeasement. Let's see what happens.
We shall see.
Chamberlain tried appeasement as well, so keep that in mind.
Yeah. Well, Q2 2025 ended 9 days ago, so I'm sure we'll be catching up. It typically takes you a month, so.
Yeah, and this one it took a while for us to do this show, but we got Honey Badger coming up in August and things. But I think by August, mid-August, we can do another one already. Catch up on Q2.
All right, sweet. So we'll catch up next month. I've got a hop.
All right,
We'll call it the top of the hour. But
thank you, gentlemen.
Go support the man doing all the work to surface.
At One Base Money is my handle if you're curious. At One Base Money.
And porkopoliseconomics.io. That's the website. Go check it out. Peace and love,
Thank you, guys. Take care.
Freaks, thank you for listening to the show. I hope you liked it. If you did like it, please make sure you subscribe, rate, review the show. It helps us out a lot. And also, if you like these conversations, I've come to realize that many people listen to the podcast. They don't know we have another sort of layer of this media company. We have the newsletter, the Bitcoin Brief. Go to tftc.io. Make sure you subscribe there. A lot of the topics that are discussed on this podcast, I write about 5 days a week in the newsletter. We also have the TFTC Elite tier. If you sign up for that, become a member. We have a private Discord server for the elite freaks out there where we're dropping ad-free versions of this show and having discussions about everything we talk about. A day early. Logan wanted me to make sure if you want to get the show a day early, become a TFTC Elite member. You will get that. We have our Discord server. Right now it's conversation between myself and TFTC Elite tier members, but we're going to expand that. We'll probably do closed Q&As with people in the industry. I may be doing Macro Mondays. So join us. Go to tftc.io. Subscribe. Find the button in the top right corner of the website. Become a TFTC Elite member. Thank you for joining us. Okay.